Assalamualaikum and hi, my name is NABILAH binti ZAINOL EFFANDY. My matrix number is 1231622. So today I will talk about the introduction of our topic, which is Islamic vehicle financing. Islamic vehicle financing in Malaysia started officially in 1983 through Bank Islam Malaysia. Since then, the system has grown with the introduction of Sharia compliant contracts like ITAB and Murabaha, which are designed to avoid riba or interest. So ITAB works through leasing followed by a sale, and Murabaha involves selling the vehicle at a profit after buying it on behalf of the customer. So even though ITAB is Islamic in structure, it's still regulated by a conventional act, which is Hire Purchase Act 1967, which may cause confusion and make it look less Islamic in practice. Also, there is no specific law yet to fully govern Islamic vehicle financing, causing inconsistencies between banks. Okay, now, before we go further, let's go through for definition. So, what is ITAB and what is Murabaha? Okay, so in the simple meaning, ITAB stands for Al-Ijarah Thumma Al-Bai', which is lease and sale, which means ITAB a contract that combines leasing and sale, and Murabaha means a cost plus profit sale contract. So, vehicle financing lets people buy a car through installments instead of paying all at once. In a conventional system, this involves interest, which Islam forbids. So in Islamic finance, ITAB, the bank leases the car to the buyer and then sells it after the lease. And Murabaha is, the bank buys the car first and then sells it to the customer at a non-profit. So the payment is done in installments. So both method or both models focus on transparency, fairness and avoiding prohibited elements like riba, gharar and maisir, which is gambling. So Bank Negara Malaysia oversees and ensures Islamic contracts follow the Sharia while supporting ethical finance.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aliah Athirah binti Muhammad ZAINOL. My matrix number is 1231651. I will continue with Sharia and Bank Negara requirement. As we know, every type of financing, including vehicle financing, must comply with the established principle of Sharia. Most of the basic contractual agreement used are Al-Ijarah, Thumma Al-Bai', ITAB, and Murabaha. ITAB combines Ijarah and Bai' contracts. The Hanafi school defines Ijarah as a contract for a benefit with payment. Its pillars include two contracting parties. Shafi'i and Hanbali require legal age, sound mind, and consent. Offer and acceptance must not have long gaps or specific condition. The wage and the benefit must involve valuable property with specific usage period and amount, while al-bay' refers to a contract of exchange of goods for other goods, usually conducted in the form of currency. So, both contracts are executed successively, starting with leasing and ending with sale. Bank Negara Malaysia also issued guidelines on the Ijarah contract. This contract is binding and cannot be unilaterally terminated unless stated otherwise. It consists of 4 components. The contracting parties must be natural persons or legal entities. The contract is concluded through ijab and qabul with mutually agreed terms. The asset and usufruct must be owned by the lessor, be valuable, exist, identifiable, deliverable, and not based on debt or perishable item. The rental payment must be agreed upon the commencement of the contract and cannot be unilaterally increased, and any outstanding payments are considered debts. Next, Murabaha contract. Murabaha, according to Wabah al-Zuhaili, as a sale and a purchase at the original price plus an additional profit margin. There are several conditions that must be fulfilled in buying a Murabaha contract. The conditions include disclosure the original price, disclosure the profit margin as a part of the sale price, and ensuring the price is clear, measurable, countable, and weighable. Murabaha, according to Bank Negara Malaysia, it refers to a sale and a purchase of an asset where the acquisition cost and the markup are disclosed to the purchaser. The contracting parties are the seller and buyer who must possess legal capacity. The asset must be Sharia compliant, valuable, exist, identifiable, deliverable, and owned by the seller. The price and currency must be agreed upon based on the disclosed acquisition cost and added markup at the time the contract is concluded.
Bismillah, Assalamualaikum. My name is Muhammad ZAHRAN, HANAFI bin NOOR HISHAM, metric number 1231653. And now we move on to the example banks. In this research, we have chosen 2 banks that offer Sharia compliant for vehicle financing, which is Bank Islam, using the Murabaha contract, and RHB Islamic, using the ITAB contract, which is Al-Ijarah Thumma Al-Bay'. So first, a brief background for both banks. Bank Islam was launched in 1983 by Yang Amat Berhormat Tun Dr. Mahathir Mohamad, and it was the first Sharia-compliant banking institution in Malaysia and Southeast Asia. The first branch was at Complex Jemaah Haji at Subang, and now has 147 branches with headquarters at Menara Bank Islam in Kuala Lumpur. RHB Islamic was established in 2005, and it was the first full-fledged Malaysian Islamic bank that has matured from an Islamic banking window operation of RHB Banking Group, the fourth largest banking group in Malaysia in terms of assets. And it was formerly known as Kuang Yi Bank Berhad, and now has over 200 branches with headquarters at Menara Yayasan Tun Razak in Kuala Lumpur. So now we'll look at the detail of how Bank Islam operates its facility, which is called Vehicle Financing I or Vehicle Financing I Grade 1, using the Murabahah contract, which is a sale contract with a disclosure of the cost, price and profit to the customer. Firstly, the bank will appoint the customer as its agent, called Wakalah, to purchase the vehicle. And then once Bank Islam owns the vehicle, Bank Islam will sell the vehicle to the customer with disclosed cost, price and profit. So for example, if the bank buys the car for 50,000 ringgit, they will sell to the customer for 55,000 ringgit with disclosure to the customer that the cost of the car is 50,000 and the profit they will take is 5,000 ringgit. So the eligibility for whoever want to apply for this facility is he or she must be Malaysian citizen and 18 years old and above, not exceeding 60 years old at the end of payment period, and must be a fixed income earner. Next is RHB Islamic Bank's facility, which is called Vehicle Financing I Variable Rate Flexi Redraw, using the ITAP contract, which is Al-Ijarah Thumma Al-Bay', lease followed by purchase. So it starts with Ijarah, which is leasing or hiring, where the customer will lease the vehicle from the bank at an agreed monthly installment over a specific period, and that the bank will appoint the customer as its agent called Wakalah to handle the maintenance of the vehicle during the lease term, as the bank owns the vehicle. And lastly, a sales contract, which is al-bay', will be executed when the customer are deemed to have an option of purchasing the vehicle when the lease term expires. So for example, if the customer takes the 9 years of financing tenure, so the period of 9 years is the ijarah, which is leasing or hiring. And lastly, the bank will offer the vehicle to the customer to buy with a specific amount set by the bank to transfer the ownership. So eligibility for this facility, he or she must be 18 years old and above for both sole proprietorships and partnerships, and they will need a guarantor if they are non-Malaysians or aged below 21 years old or above 60 years old, and the guarantor must have the affordability in meeting the payment obligations.
My name is MAISARAH binti YUSNAIDI and my matric number 1231635. So in this section I will discuss about comparison with BNM policy documents. But firstly, in comparing Murabahah and ITAP, both contracts offer Sharia compliant vehicle financing but differ in structure and customer experience, which is Murabahah is more straightforward, which means the bank purchases the vehicle then sells it to the customer at a profit margin, and ownership is transferred immediately and the customer begins paying fixed monthly installments, and this offers clarity, but all risk, damage or loss fall on the customer from the start. And for ITAP using by RHB Islamic banks use a two-stage processes, which is the customer leases the vehicle first, and with the bank retaining ownership during this period, and only after the lease ends does the bank sell the vehicle in a separate contract, and this gives better protection to the customer during the lease, as the bank remains responsible for major risks. So when we compare the vehicle financing practices of Bank Islam and RHB Islamic banks with Bank Negara Malaysia policy document, we can see that both institutions follow the Sharia compliant, but their approaches a bit differ based on the contract they use. And Bank Islam's Murabahah complies with BNM's policy that require the bank to first own and possess the asset before selling it. And Bank Islam fulfills this by purchasing the vehicle first and then selling it to the customer with a clearly stated profit. And the contract avoids riba, which is interest, and moral uncertainty through fixed pricing and transparent terms. And for RHB Islamic banks, which is ITAP, based on BNM's Ijarah policy 2018, ensures that the bank retains ownership during the lease period, and it uses two separate contracts, which is one for leasing and another for the sale at the end. And the bank also bears the responsibility for maintenance during the lease as required by policy document. And this structure prevents hidden interest or ambiguity. And in summary, maybe Murabaha offers simplicity and early ownership, but transfer all the risk to the customer from the start. And ITAB, while more complex, which is offers better risk sharing and compares with the Sharia principle of al-kharaj bidaman, meaning that gain comes with liability.
Alright, for this part, which is the analysis of product, I have divided to two important points, which is the strengths and the challenges of vehicle transaction. So, let's begin with the strengths of vehicle transaction. First of all, vehicle financing can improve affordability. It allows people to buy cars through monthly installments instead of paying the full amount upfront. This is especially helpful for young workers and middle-income groups. Secondly, Islamic financing have more options such as Murabaha, Tawarruk, and ITAB. There are offered Sharia-compliant solutions. These contracts avoid interest like riba and follow ethical principles like fairness and transparency. Lastly, vehicle financing helps banks generate profit and supports economic growth. Recently, banks have also introduced green financing for electric vehicles with lower rates and longer payment periods. Now, let's look at the challenges. One more challenge is the risk of payment default and vehicle repossession, especially if borrowers lose their income. Another issue is depreciation, which is cars lose value quickly and sometimes borrowers owe more than the car is worth. In addition, Islamic products like Tawarruk can also be complex and confusing for customers that unfamiliar with the structure due to many customers' lack of financial literacy. In conclusion, vehicle financing is helpful and widely used, but it comes with real risk. Financial awareness and continuous improvement are important to make it more effective and ethical.
To conclude, Islamic vehicle financing offers a Sharia-compliant alternative to conventional loans using contracts like Murabaha and Al-Ijarah Thumma Al-Bay', which is ITAB. These contracts avoid interest, uncertainty, and gambling, which are prohibited in Islam. Bank Islam uses Murabaha, where the customer gets immediate ownership with fixed monthly payments. Meanwhile, RHB Islamic uses ITAB, which allow the customer to lease the car first and buy later, giving more flexibility and risk sharing. So both products follow guidelines by Bank Negara Malaysia, ensuring transparency and fairness. However, there are still some challenges such as legal inconsistencies, complex contract terms, and lack of awareness among consumers. So in the summary, Islamic vehicle financing supports ethical banking and financial inclusion. It gives Muslims a practical and religiously acceptable way to own vehicles while staying true to Islamic values.